Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the indices, and we're going to look at some more ETFs. We're going to take a look at Bitcoin, and then we're going to look at the Treasury 10 and 30 year, and then we're going to look at volatility. A lot to look at in this video. I'm going to try to talk a little bit faster. I know I dragged these out way too long. Check out Red Tuesday. I want to start off with this. Okay, so there's a pattern in the markets when a stock or a cryptocurrency, or so basically, if you have an equity or you have even an indice that's up on a Friday and it's been running the week before, and then it's up again on a Monday, many times Tuesday is the red day. It's Red Tuesday. And so this is a pattern that's been playing out for a very long time. And so we're going to see if that pattern continues again tomorrow. Usually you get a Red Tuesday when the stock market is up on a Friday and a Monday. That's the profit-taking day. And so it pays to know the patterns in the markets. And that's one of the things that we teach in the chat. So I highly recommend you coming there. Our chat's a little bit different than other chats. We're trying to teach all throughout. I'm trying to post TA and information with the alerts. And so it's just more of an educational and trying to help people take their game to the next level. Everybody's helping one another, so I recommend everybody coming and checking it out. You have to come to the premium chat. That's where everybody's at. The free chat is not where it's at, and so you have to come and pay. It's only $15 to $20 a month. I recommend you checking that out. Okay, so tomorrow, the reason why it could be Red Tuesday is because of the testimonial by Fed Chairman Jerome Powell, and so we have not heard this gentleman speak yet, and so this is going to be the first time that we get a look at him. We got to read the notes, and the markets seem to like that we rallied off of that news, and then now we're going to actually get to see him speak live, and so this is going to happen live tomorrow at 10 a.m. Eastern Standard Time, so 7 o'clock for people like myself on the West Coast, and so this is going to be a half hour after the market opens, and so we could see some volatility tomorrow. We could possibly see a red day. If you look here, the markets are fluctuating around. When I was making this earlier, the Dow Jones Industrial Average was up like 5. You can see the S&P's red. They're just flat. I would call this basically flat. Look at VIX over here. It's flat right now, and so basically tomorrow there could be some volatility. I think it's going to come down to what the Fed chairman says. What I'm concerned about is did we just experience buy the rumor? Right? We bought the rumor. Everybody's rallying into this, and nobody took precaution. I mean, look at VIX over here. It pulled down, and then as you can see on this chart, it's difficult to see, but there's this is the VIX futures, and you can see people are starting to take a little nibble here. It's holding up 3 red days in a row, and they're holding a little nibble, and so tomorrow VIX could get a bounce, and the markets could take a breather. Okay, but it was a great day today, and so congratulations to everybody. I posted information on Friday trying to alert everyone that the markets were signaling that Monday was going to be a big up day, that we had the big bullish move, the break above resistance on all the charts that we were looking for the indices and the ETFs, and it was just all setting up just perfect for the bulls. And so that was the big thing that was signaling ride, and so today was the big payoff. And what we've been watching is Bitcoin, and we've been watching Bitcoin's movement to see are the markets going to follow Bitcoin and crash, or is Bitcoin going to stay healthy and the market's going to stay healthy as well? And so yesterday was a really big day. These last couple of candles, you can see the middle Bollinger Band is this solid purple line. Okay, so that was tested on Saturday. It held. Friday it held. Saturday it held, and then yesterday, Sunday, there was a nice bounce off of that level, and there was a close back above EMA's 4, 8, and 13. And so right now it's hitting the key resistance level. You can see all these candles here are hitting the green line. That's the 50-day simple moving average, and that is at 10,583. And so one of two things are going to happen here. Either there's going to be a break above resistance or a break below support. Now, if it drops below that 20-day simple moving average, that's going to be a red flag for Bitcoin, and it could signal a red flag for the markets. A lot of people are putting a correlation between Bitcoin's movements and the market's movements, with the markets lagging behind. And so we're trailing behind Bitcoin's movements and following its lead. And so if Bitcoin breaks down, the markets could break down. So it's a crucial point. And if it does drop below that middle Bollinger Band, trend, you're looking at a drop to the 200-day simple moving average at 8670. Okay, that's the red line here. Now, if it breaks above that 50-day simple moving average and if it closes above, I think that's going to be the major bull signal. That's going to signal Bitcoin has more upside potential. Now, it has to hold that level. Once it gets above, then you use that as your stop loss level. You don't want to hold if it drops below. It has to stay above and then push higher. Then it has to break high close horizontal resistance here at 11,224. So you have 10,584 and 11,224 is the two big levels for Bitcoin to break. Now let's take a look at SPY, the S&P 500. This was a great move. So congrats everybody. This was the move that everyone wanted to see. So this is awesome. At 58 on RSI, you know, Fasto is at 99, so it is frothy. But that 58 on RSI, it shows it's got gas in the tank to keep pushing higher. And you know, the close on Friday, notice how there was this close above the middle Bollinger Band, which is the 20-day simple moving average, and above the green line, which is the 50-day simple moving average. That was a big signal that it wanted to head higher. It also closed above a high close horizontal resistance, the close above these candles. And so the close above all those key resistance levels was your signal. It also closed high of day that okay, the markets want to take this higher, and they did. They pushed it higher, so congrats. And so once again, the theory is proven. When you get a close above high close horizontal resistance or above that you know, key moving average, when it's been major resistance, many times there's follow through. And so big move. Notice though the volume was very light. It was just you know, the volume has been super light, and so this has been a light volume rally. I would say that's the one red flag right now. Now, if you look at the SPY 60-minute chart, you can see here that it bottomed out on the 9th. It came back up. It formed a double top over here and on the 16th. Okay, with this level, and then it pulled back, found support off of that 1500 simple moving average, got above the middle Bollinger Band on the 23rd, and it's been riding EMA 4 ever since. And so if you see a close below EMA 4 at 277.27 on the 60-minute chart, that's going to be your signal that's cooling down. That'll be a change in trend from Friday and Monday, okay? So the trend right now is it has to hold that level. So even if you're not looking at the 60-minute chart and you're just watching SPY early, if you see it drop below 27, you know, 277, then that's going to be your red flag signal. If you start seeing SPY at 276 or lower, you know, and to anything at 276 or lower, 276.99, that's going to be a big red flag, because that would signal that this bullish change in this bullish trend is changing, and a possible, you know, consolidation is coming. That's where you could see it pull back to 275 and test that 200 simple moving average and this closing price from this 16th. Okay, and to the upside, if it can break above the closing price on the second here, this 278 resistance zone, then you're looking at a run up here to 280, 281. There is a gap between these two candles, and so you know, that gap could get filled between the first and the second, and so a run up to you know, 281 would fill the gap. Okay, let's look at the weekly chart. So the weekly chart, each candle on this chart represents 1 week of trading. This is like a 1-year, 3-month chart, and so it shows the big pullback and the bounce off of the 50-week support zone. You know, it got back above the middle Bollinger Band, above the dotted purple line, and then for 3 weeks in a row it has been forming candles above EMA 4. Notice that it has a declining volume pattern down here, and this week starting off with very light volume, so there wasn't a lot of conviction behind the move today, and what you're looking for is for the EMA 4 to hold below 275. Yeah, it looks like there is the you know, and it has the slight gap. You know, there's a slight gap between low of week and high of week last week. So you know, it could come down and fill that gap. You know, a drop down to 275 would fill the gap. Now to the upside, it's hitting the closing price here on the second week of January, that 278 resistance level. If it can get above that, 280 is the next level. That's the third week in January. And then you have, if it gets above 280, it could really get cooking and run all the way up to 286 and test that recent high close. Okay, so those are big levels to break. And then if you look at the Dow Jones Industrial Average, okay, so it had a huge move today. It closed up 400 points, you know, 399 points. So congrats everyone. The charts were signaling more upside potential. Notice it's at 57 on RSI. It has a lot of room to run. When it gets above 80, it really gets cooking. So it has to stay above 50. If you see RSI drop below 50 on any of these indices or the charts that I'm showing you after they've been above, that's a red flag. Now Now Fasto did close at 99 today. It's pushing really hard. It could take a breather. If you look here, it has 3 white candles in a row. You know, it made that huge run a couple weeks ago, and right now it's on a similar type of run. There is an unfilled gap between high of day on Friday and low of day today. So a drop down to 25,335 down to EMA 4 would fill that gap. So we have to be on the lookout for a gap fill. Now the Dow Jones Industrial Average actually had a volume spike today, which was bullish compared to the other indices. You know, volume was increasing today. They were buying and pushing it higher. So that was good to see after a mini declining volume pattern. Now, as long as the middle Bollinger Band and the 50-day simple moving average hold, that will signal more upside potential. That will signal this uptrend should continue. And then what you're looking for is a retrace back up to that 2660 level. Now if it fails to get back up to that level, then it's you know, what could happen is if people do not like the minutes tomorrow, you could see a pullback and possibly see this gap filled. You know, there might be the middle Bollinger Band might need to be tested before this makes that big break to the recent high. I think it's going to come down onto how well the meeting is perceived by the traders tomorrow. Okay, now if we look at the NASDAQ Composite, you can see here it had a huge day today as well. It closed up 84 points, you know, over 1%, and so this has been very, very strong. RSI at 61, Fasto once again at 99. You know, so they're signaling temporarily overbought. Now you have a gap, a big gap on the chart. There was a huge open today, and so a drop down to EMA 4 at 73.24 that would fill the gap. You know, it's got a nice strong uptrend going. You know, the gap does make it seem frothy, especially the Fasto at 99. As long as the EMA 4 does hold, the chart's still super strong, and you're looking for a run back up to that recent high close just above 7,500. That's the closing price here on the what is this, 26th of January. And so yeah, so this is a very sweet move for the Dow Jones Industrial Average. Just if it cools down, be looking for a potential gap fill. Now if we look at the Russell 2000, you can see here it closed up you know, very nicely today as well, up 154 points. So that was it closed at 154. It closed up sorry about that. It closed up here from above that 50-day simple moving average on Friday. So it closed above the green line, and then notice how it closed above high close horizontal resistance as well. And so it had this sideways channel, and then Friday's close above all these key resistance levels, you know, above the middle Bollinger Band, the dotted purple line, above the closing price here, and then above the 50-day simple moving average. That signaled more upside, and then it followed through today. Now it followed through today on very light volume. Notice how the Russell 2000 had super light volume, actually the least amount of volume that it's had in since January, and so compared to the Dow Jones Industrial Average, which had really big volume, or very nice volume, I guess I wouldn't say really big, but nice volume. It had an increasing volume, and so yeah, this is people weren't loading heavy on the small caps today. If it does pull back, you want to see 154 hold, that 50-day simple moving average. If it does hold, then you'd be looking for a retrace back up to the recent highs. You know, 160 was that recent big high level, and so yeah, so if it does drop below that 50-day simple moving average, it would signal that it's cooling down. Now let's look at some ETFs here. Or let's look at SPXL. This is the S&P 500 bull 3 times, and so yeah, it closed at 56 on RSI, 99 on Fasto, so it's a similar pattern. Be watching plus DI here, and on all the charts I just showed you. If you get a crossover with the green line crossing the red line to the upside, that's called a ADX bull cross, and then many times it'll signal a breakout higher. Notice that the inverse of that is the bear cross, when the green line crosses the red line to the downside, the red line to the upside. Notice how that signaled this big drop, and so yeah, so the inverse would be the green line crossing over, and that could signal a push higher. Now there is an unfilled gap on the chart between high of day on Friday and low of day today. A pull back to that 50-day simple moving average at 4692 would fill the gap, and so yeah, so we'll keep an eye on that. If it pushes higher, you know, getting above that 49 level, level will be key. You know, that there's a big red candle here, so it could work its way back up here to this 5150 level. That was the closing price way up here. So yeah, so it has a nice uptrend going. It just has to stay above the middle Bollinger Band and above that 50-day simple moving average. Now, if you look at UDOW, it was it had a nice close today as well. It was at 56 on RSI. Once again, 99 on Fasto. It got above the middle Bollinger Band on Friday. So notice that close above the dotted purple line, and then it closed above high close resistance. That signaled more upside, but it had to break the green line, which it did today. And so the close above that level is signaling you know, more upside potential. You know, it had that nice move. There is an unfilled gap between high of day on Friday and low of day today. If it dropped down to 99, it would fill that gap. Okay, it could come back, bounce off of the 50-day simple moving average, fill the gap, and then continue heading higher. That could be the pattern. You know, if we don't go into a V-shaped rally right back up to the recent highs, the pattern could be pulling back and retesting that middle Bollinger Band to make sure that support holds. Remember, we have been following Bitcoin, and that's what Bitcoin did. Bitcoin broke above the middle Bollinger Band, ran up to the 50-day simple moving average, pulled back and tested the middle Bollinger Band, and so, you know, maybe you know, all the charts that I'm showing you that broke above the middle Bollinger Band, they haven't pulled back to test it yet. That could be a pattern if it follows Bitcoin. And so yeah, so we'll be watching UDOW to see if it continues heading higher. Now if you want to trade the small caps, this is one way to do it. It was with the bull 3 times, and so this is ticker symbol TNA. It closed at 74 on RSI. You know, so it has room to run until that 70 overbought level. 97 on Fasto, and notice how it closed just above the 50-day simple moving average. It needs to stay above that level at 71.91. You want to see it above 72. That would signal that it's intact, the uptrend, the new uptrend that started on Friday with the close above that middle Bollinger Band. And if it closes back below 72, that would be a signal, okay, yeah, this is cooling down, and you might see a retest of the middle Bollinger Band at 68.81. You see that 69 level tested, and that would be the big support level on a pullback. It needs to hold 69, but if it stays above 72, that would be really bullish. So keep an eye on TNA. Now if you take a look at TNX, this is the CBOE 10-year U.S. Treasury yield index, and so basically this is following the 10-year U.S. Treasury. And so if you notice, it had that nice bounce today off of the middle Bollinger Band. So it pulled back, and then it hit the dotted purple line, which is the middle Bollinger Band, and this is the key support level to hold. Notice it held back here in December. This is the first time in 2018 that this level has been tested, and it did hold today. And so if we look here at the up, see, so up, see, it was just green for a second, but yeah, it's flirting with going green. And so yeah, if you look at the chart here, this is the 10-year Treasury note. You could see that over the course of the month here, it's flattened out, okay, at this level. And so at this 286 level for multiple, you know, days here, now it's trying to hold this support level, and it looks like notice how today, okay, so if you can see here, it came down, it hit the bottom and came back up, and it's double topping right now with the high on Friday. And so if it breaks above that double top level at 286, they held it sideways. It got right back up to this double top. I was watching all the day today at this 286.6 level, and if it gets right back past that level, watch 286.68 is the big level to break. If you see it up there at 287 or higher, that's going to be a signal it's breaking resistance, and that's going to signal downside risk for the markets. And so now look at the TNX 10-year Treasury yield 15-minute chart, and so what you can see here is it came down and it hit support. Okay, and today it found support. It broke below the middle, you know, it had a good uptrend going. It was cruising over here, got above the middle Bollinger Band, was cruising, and then it had a gap down, a huge drop. It found support today down here in this 28.30 support zone. It got back above the middle Bollinger, or above the EMAs 4, 8, and 13. Notice how the pink line crossed over the lime line, and it has a nice uptrend going now. And I was posting information into the close here. It's flirting with the 50 simple moving average at 28.60. So if you see TNX above 28.60, that's going to be very bullish for this chart. And then if the correlation between treasuries and equities continue the way that they have historically in the past, TNX rising should be a negative for the markets. And so this is another reason why I was thinking Tuesday could be a red day tomorrow, is because I was watching TNX heat up, as we're heading into the Fed meeting, and this was telling me that possibly people are taking some precautions this way, and they're loading up on some 10-year beforehand. Now it has to break above. If it doesn't get above that 50 simple moving average, then it's not ready to go. But if it does and it turns that into support, then you're looking at a run up here to 28.77. It has to get above the 300 simple moving average of 28.75. But if you see it up here at 28.90 or above, then it could really get cooking again. That would signal that the chart is really bullish. Okay, let's look at the TYX. This is the 30-year U.S. Treasury. And so notice it came down and it bounced today as well. And so it hit the EMA 13, and so that's a key support level. That's at 31.38. Notice the last time it hit this level. Okay, each time it's hit this level since it's been in this uptrend, it's held. Every time the orange line gets hit, they buy it, right? So orange line hit, bought, and so it came down towards the orange line, they bought it, and so today they loaded the orange line again. All right, so it's been holding. That's the trend. All right, so is it going to continue? If it breaks below EMA 13, then you're looking at a drop down to 31 to test that middle Bollinger Band. As long as the middle Bollinger Band is holding, that's the 20-day simple moving average. The uptrend's intact. It still has a strong uptrend. Now it has to get above EMA 4 at 31.68 to get moving. If we look here at the chart, you can see here how it came down and it bounced today, intraday, and it had the same type of pattern. It came down, bounced, and came back up, and it went sideways. And so you're looking for a break above 315. How high did it get? It got up to 316. So if you see it breaking out above 316, that's going to be your big signal that the 30-year is starting to cook, and it could go back up to the 320s. I mean, it depends on what happens tomorrow, I think. But heading into this Fed meeting, we could see a little cool down in the markets, a little heat up on the treasuries, get some volatility moving a little bit. I mean, this is just some contrarian thinking. It seemed like everybody was really drunk with greed today, thinking that, oh yeah, man, we're cruising right back up to the old highs. Everything's cool. I have no idea what happened. A couple weeks ago when the market dropped 11% in a couple of days, no big deal, cruising through. And so it just seems to me like, I don't know, can we trust that? And to me, I feel like there's red flags. And so if you look at TY, even though there are a lot of bullish indicators on the charts and we could pushing higher, it just seems a little too good to be true that we're going to run right back up to the recent highs without taking a breather first. And so if we look at the 30-year Treasury, we can see here on the 15-minute chart that it heated up as well. So notice how it came down above the middle Bollinger Band. It got back up to this is cooking harder than the 10-year because it's above the middle Bollinger Band and it's above the 50 and the 300 simple moving average. According to our strategy, it is officially in play. As long as the candles are forming above the 50 simple moving average and above the middle Bollinger Band, that signals that anything that you're looking at on the chart is in play in a bullish uptrend. All right, and it's hitting the key resistance level, 31.58. And so if you see it above 31.58, 31.60 and higher, that's going to be a signal that the 30 years cooking. And then if it can get above 31.70, that's when it could get this thing going again, get a big uptrend going. Okay, so that's once all the candles are forming above, once the candles are forming above all the moving averages on the 15-minute chart, that's when you get a really strong uptrend. Right now, candles are riding EMA 4 support higher. Notice how the pink line crossed above the lime line. That's an early reversal signal. They've been, and then it's been riding above middle Bollinger Band. Notice how EMA 4 has been holding the whole time. This is super bullish. This is totally set up for a bounce. Notice how the candle on the daily chart. Notice how the candle on Friday was a solid red candle. It closed below the open. Today, it closed above the open. Okay, so the open was way down here, and the bulls were actually strong into the close. The bulls had it closing near high of day. Notice the last time this candle formed. Okay, what happened? A white candle. Okay, last time it formed on a pullback, white candle. All right, last time it formed, white candle. All right, or up day. And so let's see, happened again over here. So every single time on this chart that we've had this type of candle on a pullback, besides this candle right here, that was the first day of this pullback, there's been a bounce the next day. So, I mean, it's set up for it. It has that setup for it. It's showing it on the 15-minute chart that it's happening, and so it just has to follow through. And now let's look at SVXY. This is the ProShares short, VX short term, and so this heated up. So congrats everyone that was playing this. The move on Friday did signal more upside potential today. It did close up 3.5%. Because on Friday, it finally closed above EMA 4. Okay, it closed above the pink line. Notice how all of these candles were hitting the pink line. It failed to get above. That closed finally above, signal that it wanted to head higher. As long as it stays above 13, then it, this 1308 level, then that signals that it's still in play. And then you're looking at EMA 8 at 1552 as the next target to break. Now if it drops below EMA 4 and you see it below 13, that's going to be a signal that volatility is back in play, and that SVXY is cooling down. So it has to, 13 is that big stop loss level for SVXY traders. It's going to be a risk to hold long. If you're trading calls, if you're riding this long, however you're trading it, it's going to be a risk if it drops below 13. Okay, you do not want to see a close below 13. Now to the upside, 1550 is going to be a big resistance level to break. If it busts out above 1550, it could really get cooking. Now, if you look at the 15-minute chart, you can see here it had this awesome run, on Friday. Unfortunately, I know a lot of people were looking for volatility to spike, and on Friday possibly, and it actually was the inverse of that, and there was a big gap down for volatility, which created a gap up for SVXY because it's the inverse of volatility. If volatility is going down, this is going up, and so notice how it's had the really strong run, riding EMA 4 the entire day on Friday, just as strong as it gets, and then not as strong today. And notice it hit EMA 4, it came up, it hit the top, and then it channeled out. It pretty much sideways channeled for the last 4 hours of the day, and it's riding along that bottom of the channel. And so what it has to do is get above 1371. Above 1370 signals it wants to head higher, and the risk is if it drops below this 1360, the middle Bollinger Band there, that's going to be your red flag. It needs to hold 1360 and stay above that level. It will support all day today into the close. The drop below 1360 for SVXY will be your early warning. Okay, this isn't working out the way I thought, and that'll be your warning. That it could break down lower, and then you have because it could drop down to that 50 simple moving average at 1322. Now, if it bounces off of that, it could get back above the middle Bollinger Band if this is tested. But if the 50 simple moving average turns into resistance, that's when the chart really breaks down. And you get this kind of action over here. You can see how the 50 turned into resistance and it wasn't good. And so that, it has to stay above that level when tested. Okay, now let's look at UVXY. So keep an eye on this one. We're going to see if this can get a bounce tomorrow. This is this is trading VIX long. Okay, so this is UVXY. I mean, you could buy puts and short this, but keep an eye for a possible bounce. It doesn't look like it's set up for a bounce on the daily chart. It is hitting a key support level. It's hitting the 100-day simple moving average, which it closed below. Now it did form a gap down open on the chart. You can see here there's a gap on the chart, and so a run up to that EMA 4 at 1532 would fill the gap. And so for UVXY, if you see it above 14, that's going to be really bullish, and that's going to tell you it's in play. And then look for a run up to 15 to fill the gap. And then once it fills the gap, it might hit resistance to that 1530 level. It has to get all the way back up here above the middle Bollinger Band at 17 to get a new uptrend going. Now if 14 turns into resistance, look for a potential bounce off of the 50-day simple moving average at 1259. That's a huge support level. It held when it was tested back here in January, and that's what it launched off. And so you want to see a bounce off of that if tested. Notice today there was very light volume. So super light volume. This trade has been taken off the table the last couple of days. But if the Fed chair thing doesn't go so good tomorrow, this might heat up. And so look at the UVXY 60-minute chart. And so each candle represents 60 minutes of trading. And you can see here it's been riding EMA 4 for the last 2 days. And so look for a break above 1375. And so if it closes above, if you start seeing candles forming above 1375, that's going to be your signal that UVXY is bouncing. Now, if it drops below 1350, that's going to be your red flag. Look what's just below is the 300 simple moving average at 1291. Now, this was a top, and then once it broke above this 1291. 1391 level, this 13 level, that's when it really took off running on the previous run. And so look for this to be big support. You know, it was big resistance. This should be big support. It should get a technical bounce off of the 300 simple moving average. If this level fails to hold, then the chart's completely broken. So you're only 60 cents, 70 cents away from a crucial bounce level. You know, maybe another, you know, few percent lower, and this could get a big bounce, another 50-cent drop. So keep an eye on it. If it does break above that 1375 level, then it could get moving, and then what it has to do is get through all these moving averages, and then if you see it get back above the middle Bollinger Band and that 50 simple moving average at 1615, it would really get cooking. Notice how it topped out at that level on the 22nd, and then you have this descending resistance line, you know, above 17. But first things first, let's see if it can break 1375. Okay, so thank you very much for viewing this video. Yeah, so Bitcoin is you know, check it out. It's under a little bit of pressure here, forming a doji, and so yeah. And then remember, we have the Fed thing tomorrow at 7 a.m. So it's going to be a big morning. And then you have the 10-year Treasury is turning green. All right, and then the 30-year is wanting to turn green as well. So yeah, look for potential pressure on the markets tomorrow. It could happen possibly. Let's see it all here just before I close. Yeah, but hey, if it doesn't if we get a good positive reaction, I'll be the first one to be you know, riding the bull train and wanting to see the markets head higher. I'll post more charts and technical analysis tomorrow. Please come check out the chat. I'll post the link below the YouTube video. Okay, thank you.